Hello, welcome everyone to this market analysis webinar with myself, Jasper Lawler, on behalf of London Capital Group. So this week we're going to be looking through some of the major markets offered by LCG. So that's the Forex markets, that's stock indices and commodities, including gold and oil. If you have any questions at any point, please send them through to me and I'll do my best to answer them. Or if you're watching a recording of this, maybe on YouTube, then obviously leave a comment and we'll be able to get back to you there. Let's switch gears to the trading platform. So I'm going to start off with the Forex market. That is how I tend to do things. So let's start with euro dollar. Okay, so interesting in the euro recently. So if we remind ourselves, if we zoom out a little bit, it's been a meandering downtrend for a while, with 111 proving pretty stubborn. So we had what we felt like was a potential false breakout through 111. We made a new high, and then this was actually something that we called for, was a drop down towards the 111 level, setting up potentially something along these lines. Now this could still happen, where we get a rebound up through there, break above this declining trend line and head towards the top of the range at 114 again. It's not altogether clear where we're going, but I think the opinion you've got to kind of try and take here is that the trend is down. We made a new low. We bounced up, we consolidated for a while, and that could have resulted in an upwards break, but it didn't. We fell quite sharply to the downside. So now 111 holding again temporarily, but I think any bounce up towards those highs again offers an opportunity to get in with the overall downtrend, and potentially look for the market to drop through this key 111 support. And if it does so, because 111's been support for a while, I don't think 110 does much, and we drop down close towards 109 if that 111 level gives. So key to obviously what happens, I think if we if we do get a breakthrough this through 112 above this declining trend line, that does set up a 114 type situation. For the time being, we're sticking with the trend. Let's switch gears to the British pound. Similar thing here, where 122 has been capping the pound recently. We haven't even been able to get there in the last few days. 122 was the week before last. Feeling so it's two sort of central scenarios we're working with, both of which are bearish. Is that we get a drop through 121 and any kind of short-term bounce after that drop through 121. We look for the market to fall lower, for that to be worthwhile, from 121, you need to be targeting something in around 119, which I think the market would be pretty overstretched at that point. Obviously 120 is the key level, so you might get some buying interest coming in below that key level. If not, obviously, then 118 being the next level down there to target to the downside. And then just to prove that these aren't just abstract round numbers, if we pull back to our weekly chart, we can see that we're entering in kind of key supports. Aside from the flash crash, these are key levels that the market could look to buy value from on a long-term basis. So market's been selling off for a while. So, we're kind of ready for a bottom to come in, but there just isn't any sign of it yet. Switching gears to dollar yen. So this was a recent opportunity where the market fell off. We came back up to the 107 level, hung around there for a couple of days, and then sold off down to 105. 105 is pretty significant support here. We've not actually touched 105 yet. We've not actually taken out this low, but obviously we're challenging it. So in the context of a pretty range bound market, we're getting a decent bounce off 105. So it's possible that this is the bottom of the range, but we're still trying to go in line with this shorter term, if you like, more medium term, I suppose, downtrend, and looking for something along the lines of maybe a little upwards break, gets some people excited on the short term, but then rolls over to resume that longer term down picture. So again, just trying to follow the trend, but it just looks like after this big rip up from 105 to 107, it looks like 107 wants to give way. But still, if you're looking to enter with a downtrend, obviously 108, if you get up to 109 again, then it's quite critical resistance. Certainly could be some opportunities to, again, to enter the market right at critical resistance. And obviously a break above 109, then we're in different territory. Then we'll be looking a bit more bullish, with this being the first signal and then 109 being the next signal to really start moving the other direction. But for now, the trend is down, I think, and we're assuming that the bottom of the long-term range actually gets taken out. So that's currencies for now. There are some other currencies I'm watching, but I'm not sure if they're necessarily worthwhile pointing out. Okay, dollar CAD potentially is. This was something I mentioned in a separate YouTube video recently, that maybe based on this rising trend line, lower highs, potentially we're topping out after a sharp move lower. We took out that longer term low, came off the 1.3 handle, come up as far as 133, but look at a couple of strong reversals on a weekly basis. Maybe 133 is a top. There's a confluence of factors suggesting maybe it's a top. We've got that 20 period weekly moving average. We've got the rising trend line that seems to be broken and retested. A reversal candlestick. So a few things to suggest maybe on a daily basis this double top's going to be is going to hold. And if it does, then I think you'd at least expect a challenge of this low, given that kind of longer term significance. Nice thing about this is because of all that confluence on a long-term basis, if we do end up taking out 133.40-ish on the top side, that should give some good momentum and give us a test up here. So then, that's 133.40 is really our kind of pivot for whether we want to be long or short the market. 135 being the round number up here, well, even 35.50 being the kind of level we could target to the top side were this to break. But seems like the bias for the moment is a possible double top here. So let's switch gears towards the indices. So I'll start with the UK. Let me just fix the template. Okay, so here's the thing with the UK. You're going to see a bit of a general pattern as to what I say with these indices here. You can see that this is a fairly clear-cut level of support through here. It's kind of been tested on multiple occasions. So depending on which ones you use, 1, 2, 3, maybe 4, 5, 6, 7. So it's holding for now. It's basically the sort of 7,000, between 7,000 and 7,100. We're bouncing off there for the moment. Obviously the market pretty critically fell off over here. We still are, even though the stock markets tend to rise overall, just given the way the market looks at the moment, we're staying bearish, but it just looks like probably we put in a little double bottom and we get a little rally up towards between 7,500 and 7,400. This is a sort of theoretical scenario that I suspect may play out. But all that said, at the moment, trying to assume that there's a downtrend in play. And so if we were to get up to those areas, that would be a place to assume the downtrend resumes. If it doesn't, then again, you flip more positive on the market. But at the moment, we're at a key long-term level, which seems to be causing a double bottom pattern. So, if you like trading patterns, there is some potential to kind of ride this move, assume a break of 7,300 and challenge up to 7,500 or something along those lines. But my inclination is just that this was a big heavy drop. We got a little bounce, weren't able to take out new lows, so we need a bigger bounce to find higher levels, then we roll over again, potentially. So let's see. Over in Germany, similar sort of thing. The market doesn't look the same. It is double bottoming. So obviously all these global markets, these global indices fairly moving in sync here. So maybe this double bottom plays out to some extent and we get a retest of this broken rising trend line. Just remind you on a weekly basis, we've had a series of broken attempts to get through that old record high there. Maybe this supply level is just getting kind of drained out before we eventually do get the big move to the upside. For the time being, we're assuming it's holding, and so there's another leg lower due. But again, let's see how it all pans out. These equity indices, notoriously difficult when you assume that we're entering a period of bearishness. It just flips on its head and just turns positive. So look for the levels where it should stay bearish, in my opinion, and if they don't, then you know to flip positives. That's kind of how we're viewing this 12,000 to 1,200 level in the DAX, and similarly the 7,400 to 7,500 level. If the market's able to roll over there, then we're still bearish. If not, you have to change your mind at some point. Equally with Wall Street, a huge level in 2,700, the 27,000 level. It's been rejected 4 times now, but equally we've had a decent reversal off the lows for the last couple of weeks, so double bottom in effect. Same thing that we saw in the DAX and the FTSE, so same kind of idea. We think probably we do take out these highs, but then it's just a matter of, how far do we get and what do we do once we get up to these kind of support levels again, or even just that 27,000. Does the market start to stumble here? If it does, we've got a bearish opportunity again. If it doesn't, then, in the case of US stocks, we may well be looking at new highs again. Let's switch gears to gold. So just the 1535 level was something, again, I mentioned on an individual YouTube level before we hit, because of, is it a monthly? Yeah, but because of it being pretty critical support. So this was the record high in gold. We pulled back to 1535 after making a record high. The following month we got crunched down to 1535, and that level proved pretty significant until we finally broke it, and then entered into the bear market for gold, and obviously we've been trying to recover ever since. So getting back above this 1235 is an important moment, and I think that's why we're pausing a bit. I do think we've broken out to the top side, and this move has more legs. Excuse me. But it makes sense that we're in for a little bit of a pause from that significant level. So 1480 was where after we first hit it, on the same day we dropped straight down to 1480. That'd be the first level to look at. This was something I drew ages ago, again in an individual YouTube video. I think I had it drawn in just when we were here, expecting maybe this line could work. We run straight up to 1435 anyway. So somewhere between 1480 and 1470, sort of in reverse to the indices, if you like. Obviously the indices bouncing back, gold rolling over, that's what you'd expect. So if indices do start to roll over downwards again, doesn't necessarily have to work like this. I mean, gold can go up with indices, but if we do get some kind of risk-off event where equities head down, that would certainly help the case for gold getting a bounce, either from this rising trend line, which would put it between 1470 and 1480, as I said, or you could say that 1450, roughly speaking, is the kind of the significant level in this consolidation area. So we paused at the top of it, or there's obviously a chance that we pause at the bottom of it, which would be more like 1400. So my kind of longer term picture on gold is I still think we're in for a pretty big move to the top side. I think we've broken out on a long term basis. So even if we did get a drop below 1400, it wouldn't necessarily dissuade me that longer term breakout's still happening. But nonetheless, I'm assuming that we don't go that low and that the breakout continues. But let's see. It's already been a big move, so obviously due a bigger correction at some point. Last but not least, let's just go to Brent crude oil. Pretty well. I don't always draw trend lines, but this is quite a well-defined one. Again, crude oil, a risk-on asset. So in a way, it's kind of basing out like, it's not been performing the same as equities, but it did drop off with a risk-off sentiment alongside stock markets. Now it's putting in what potentially could be a higher low. It's not really confirmed yet. We need today's price action to close above above the previous days to confirm that this is a kind of up fractal. And then if we do get that, then maybe again we take out this old high, we come up and challenge the trend line again, or even just the 20 I think that's the 50-day moving average I've got on there, is it? Better double check what indicators I'm using. The 50, yeah. So could come up and challenge the 50 or the declining trend line, but an opportunity to look out for before we even get there is we come up somewhere near the between the 60 and 61 level, up near the old high, and then that in itself is a temptation for people to follow the trend lower, and maybe we just come down and test that 56 level again, or even 57 if you're being more conservative about it. So oil, we're looking for the downtrend to continue, but again, if we get a decent break up through 61, we'd still view that as corrective, and probably that downsloping trend line is the only thing that we'd be using to think that oil has turned positive again. So i.e. some sort of move. What you'd want to see is like a drop down here, we rally up through these highs, through 61, challenge the trend line, maybe drop back to 61 again, then rally up through the broken trend line, and at some point around here you start getting more positive on the expectation of even a move right back up to 75 again. At the moment, the market is bearish. So we're looking at firstly challenging the lows at 56, and obviously if that gets taken out, looking a couple of weeks ahead, we're looking at a move back down to 50. And I think I said something pretty similar last week. All right, great. That is it for this week. For watching, everyone. Good luck with trading. Jasper signing out.